Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only, and should not be considered as personalized financial, investment, or trading advice.
It's the 17th of August 2025. Time is about 5:48 a.m. New York time. And as usual, it's another weekend. Today's being Sunday. I like to analyze the market, analyze the major indices, see where, the general market is. Because, when you know the direction of the general market, then you know that either your stock or your asset that you're trading could potentially do well. The market is going down, no matter how good your stock is or your index is, it's going to affect it. So anyway, let's get into the charts. So I'm going to start with XPX let's start on the weekly time frame. All right, so on the weekly time frame, we did not get any rejection candle. I know a lot of people are looking at the divergences on the XPX and NASDAQ and are all looking, I see a lot of YouTubers calling for a rug pull. Market is going to collapse, but I go with the charts. What the chart says is what we live by. When we are wrong, we learn from it. All right, so yeah, we didn't close with a rejection candle. Basically, this is a bullish candle making a higher closing than the previous week. So we've broken into a new high technically. Yes, we're having a little bit of a pushback from the tops, which is usual. People take profit. So based on the weekly, my bias or thesis is that the Nasdaq continues, the XPX continues to go higher in the next coming week. Step down to the daily chart. As a matter of fact, let's quickly look at our indicators on the weekly to get a perspective. So indicators wise, now RSI is showing some divergence. Okay, this was your previous RSI high, which is now considered to be the previous high. We have made a higher high, and this is where our RSI is. So I do recognize that there's some divergence formed on the chart currently as we speak. The problem is it is not confirmed. Okay, we get a confirmation if we are able to get a strong rejection candle on the weekly, like a bearish engulfing candle, a shooting star, an evening star, a grave doji. Any of those things would then confirm that your divergence is solid. But currently, yes, there's a high probability that the RSI continues going higher this week because it's not confirmed. There's no candle on the chart that says that RSI is stopped here and we're done. Now, of course, if you look at your stochastics, yeah, we are turning down, but stochastics can always turn down to about this level and go back up, especially on the major indices. I've seen this on a lot of times, like what happened here. We pulled back down, we didn't even get to the 50% level and went back up, likewise here. So whilst I see the potential rug pull that everybody's talking about, there's no confirmation yet. If you look at MACD has lost momentum, but our MACD is still above the zero level on the weekly. So we're still bullish. Okay, we're still in the bullish territory. Now, of course, momentum is down. We came down, built a little bit, and here we are. So indicators wise on the weekly, we're still looking bullish. Let's quickly drop down to the daily and the 4 hours to conclude our analysis on find evidence to support our analysis on the NASDAQ SPX500. So if you come down to the daily, yes, I do recognize what everybody's seeing on the daily chart. Okay, basically hanging man here, a bearish engulfing of the bearish hanging man, suggesting that this is a reversal pattern that is in development. The issue is the support that we own now. This support was defended very well, or is still being defended very well. Okay, so I'm expecting this support to hold because it just came off a previous support. We just broke off a previous resistance with this candle that we formed on August 12th. And so we've basically broken into a new territory. And definitely, yes, there will be a test of that territory. So I'm expecting a pullback on XPX to probably about maybe 64.17. Okay, between 64.40 and 64.17, I'm expecting a pullback into this zone, but not expecting us to continue going down. Now, of course, we get invalidated when we break below this level. At that point, it means we just put in our high and we're going to make probably a lower high. In this case, we might be coming all the way back down to somewhere here. So basis wise on the daily, I'm expecting a pullback. A step down to the 4 hours and maybe the hour to conclude this analysis period on SPX500. So yeah, if you come down to the 4 hours chart, you would recognize that we are actually coming into the support zone, and this support zone is, again, let's not forget, is the previous high right here. Okay, so that was the previous high we just broke out of, and definitely I think we're going to get a retest of this high. So I'm expecting a pullback to about this level, like I said, 64.30, 64.40, anywhere within this zone. I'm expecting us to pull back here and then continue our journey up. The trend is still up. Let's not forget that. Where would I say that we are invalidated and our thesis is incorrect? If you do break below the 50 on the 4 hours, any candle open and close below this level, then validate that we're going lower. And I'll show you the lower target in a minute when we do. Did I even put it up on here? No. Yeah, we will be coming somewhere here. We'll be coming right back to where we started from. My brother would say, to the scene of the crime. All right. So if we get invalidated, we're coming right back to 62.34. But until we get invalidated here, I want to stay with the trend. The trend is still up. On the weekly, as I was showing you, we don't have any rejection candle. So definitely, I will stay on the 1 hour chart, and I'll be monitoring if we do break the 200 moving average on the 1 hour chart. This at this point would invalidate our long position on the SPX 500. So that's the conclusion on XPS 500. Uh, Risk level, anywhere that we get into the pullback is a buy zone. That's what I probably will look at if I'm looking to go long, is to buy the dip. Knowing that we're going to push into these levels, I wait for the sell off to happen. Pick a few shares here and there, and if we do get invalidated here, it's just a small risk, 0.02% risk, versus the reward. The target wise, once we do find support after the pullback, we're going all the way to about 64, about 65.39 to about 65.50. Now that's a good reward for the risk that we take on here. Now let's step back onto the chart and look at NASDAQ 100. The story on NASDAQ 100 is very similar to the XPX as well. We closed the week with a green candle. And although, yes, there is divergence on RSI similar to the SPX 500, it is not confirmed. Okay, now I do see this divergence in place. It's not confirmed yet. Stochastic is turned down, but we're still in the positive territory. If you look at your momentum has dipped down on the histogram, but technically we're just cruising sideways. Like, there's not an increase in strength, but at the same time too, we are not really collapsing down, as MACD lines are still above the zero line, and we're still actually just cruising sideways. So on the weekly, nothing suggests that the move up is over and the trend has been up. I'm not going to try and call the tops, especially when you just hit the KC channel band, and we've not gone outside the band by any margin, and we don't have any rejection candle. Now, you want a typical example? I'll show you one here. Now, here is even a situation where you had a shooting star, but it was outside the KC band. We still stayed outside a few more candles for about 1, 2, 3, about 3 more weeks before we came down. So I'm expecting a similar pattern to play out here, to a potential target of probably about 24,380 or maybe 24,311 before we come down. Let me step down to the daily chart so we get a little bit of a granular level how things are looking with our trade plan. So our stop loss would be below anywhere around 23,510. Okay, we get a candle open and close on the daily at this level. I'll consider that as we're going further down. And in that case, our target is somewhere around 21.9. So the risk is there. I do recognize the risk, but the trend hasn't changed. And I'll wait for that change to occur before I change gears. So for now, I'm still bullish on NASDAQ 100, though I do recognize the divergence. But validation point is here. If we do get a candle open and close below this 23,510, okay, not a dip, but a candle open and close below here, that would confirm that we're coming further down, and the target is somewhere around here. If we do come back down, 21,953 will be our target. Step down to the 4 hours to conclude the NASDAQ 100 analysis. Um, and the story is very similar. The story on the Nasdaq 100 on 4 hours is very similar. Okay, we just broke out on high. This is the support zone. Okay, so you enter within this level long, and your stop loss is somewhere here. Like I said, if we break below this level, that invalidates our long position, and I'll rather go on the short side and target this area. Um, 22,745 to about 22,681. And finally, let's look at gold as a commodity asset. And gold on the weekly is looking like we might pull back down a little bit because we had a red bearish engulfing candle off last week's candle. The volume wise is not it's not the same. All right, so but it's definitely price action I'm looking at here. And with this bearish engulfing candle of this, I expect that at the beginning of this week, that gold potentially pulls down a little bit. Um, but bias wise or thesis wise, I think gold continues to go sideways between this high of 34.48 and this support point of 31.77 thereabout. This whole support zone between 32.12 thereabout to about 32.44. All right, basically this 21 moving average is kind of a trend line for support zone on gold, and I think gold continues to go sideways. Now, like I said, based on the weekly, I think gold would go down a little bit in the beginning of the week. Indicators wise, RSI is still at the 50 level, suggesting neutral stand, sideways trending. Um, Look at MACD. MACD is now of MACD is still been trending down, but you could see there is some amount of energy being built within this consolidation. Now, of course, we have just dipped down again, and we haven't officially crossed the zero line with MACD as well. So again, on the weekly, we are still in the bearish energy flow. Therefore, I'm not expecting gold to go break the resistance above it probably anytime this week. Step down to the daily chart. Let's look at how the daily MACD is still pointing down, still weak. There's no energy on the daily as well. Cycle wise, we are almost at cycle low, which suggests to me that we may fall a little bit and then we go back up on the gold. RSI is still, at least on the daily, we're below the 50%, saying that the bears are in charge of this. And that is why, again, I'm saying that I don't expect us to go break the resistance line to go a new high probably this coming week until we go back up on RSI. So on the chart itself, price analysis, yes, I'm neutral on gold. A push down to about this level, 32.86 is possible on the charts coming this week based on the weekly setup. But again, we're getting a strong defense on the 50 period average on the daily chart, suggesting that it could possibly be also that we don't even move any further down. Um, um, it's possible that this is it. Okay, and we might just try and make our way up. But again, I said until the energy changes, I am neutral on gold at the moment, and I think gold continues to consolidate sideways in the next coming week. So in conclusion, if you want to trade gold, you probably want to wait for pullback, as the weekly suggests that we could potentially dip down to about this level. All right, could dip up to about 32.96 based on the weekly chart. That's a break of the 50 on the daily to come to this support zone here. All right, now when we get here, I do expect us to bounce back up to this. So this is going to be a range trade, sideways trading for gold. So I think that's about all that I want to share with the equities, as well as XPX, Nasdaq, and oh yeah, there was something I also wanted to share also on XPX. So why do I think we may be going up? A similar thing happened somewhere around here, July 8th, thereabout. It was looking very bearish. We just consolidated off this support, and then we went back up. And this support has now been defended on the SPX500. And that's why, again, I'm thinking this support that we have found here is probably going to be defended similar to what happened here. And then if that's be the case, we will continue to go higher. I don't think that, this sell-off that came into this support that got defended is so weak that we're just going to break into a higher high and just cascade from there. Um, that is not a great reward for those that reloaded here. They definitely have a higher target in mind, and I think they might make it to the 65 zone on XPX. So that's the conclusion that I have on today's analysis. It's been almost 20 minutes. I try to stay under 20 minutes on all these analysis. So thanks for your time. Thanks for visiting my publications, and have a great trading week. Cheers.